All right. Zero hedge again. Existing home sales. Again, I'm trying to put this stuff out in advance for people to see some trends and things that are happening. And, again, God willing, cryptos blast off, housing goes down, pay your house off and or buy another fire sale type of a house, move, whatever you need to do. And even if cryptos don't go, it's still nice to know possibly what might be coming our way. Existing home sales drop for 7th straight month in a row as home builders stocks collapse. With U.S. home builder stocks having their worst year since 2007. That's a funny year. Remember that year? Hope is high that September will show the long-awaited rebound in home sales, despite, of course, a soaring mortgage rate because rates are rising. After stabilizing unchanged in August, existing home sales were expected to drop 0.9% month over month in September, but instead, August data was revised. I'll do it because I haven't done it in a long time. Ooh, double revision. Look in my eyes. It's that double revision. August data was revised, notably lower, and September plunged. Not down 0.1 or 9%, I thought, 3.4% month over month, the biggest drop since February of 2016. This is the 7th month in a row of annual declines in existing home sales. Sales fell across all price ranges, not just the low end, as we have seen recently. Medium home prices rose 4.2% from last year to $258,100. And you can't blame supply, as it rose notably 4.4 months supply in September versus 4.3 in August. And as NAR notes, this is the lowest existing home sales level since November 15, he said. A decades high mortgage rates are preventing consumers from making quick decisions on home purchases. All the while, affordable home listings remain low, continuing to spur underperforming sales activity across the country. There's a clear shift in the market, but with another month of rising inventory on a year-over-year basis, those seasonal factors are leading to a third straight month of declining inventory, said Yun. Or is it Yun? Homes will take a bit longer to sell compared to the superheated, fast pace seen earlier this year. Home builder stocks are collapsing. This is the worst year for home builder stocks since 2007. Zero Hedge finalizes that by saying, it's probably nothing. Just keep hiking the rates. Hike, baby. When there's a problem going on, you must hike it. When the homes are not selling, just hike it. Into shape. Shape it up. It's not too late to hike it. Or we could tell the Federal Reserve to take a hike. Now, I was saying a couple years back, I think, and everything you might notice, Joe, you always use the word a couple years. Whenever you're referring to something, Pat, you say a couple years. It's kind of like when someone gets pulled over, they've been drinking, they've had 7 or 8 beers. How many beers do you have tonight, sir? Couple. Every time it's a couple. Sir, you look blazed. Been smoking some weed? Yeah, a little bit. How much? Couple joints. Small ones. But I've been saying since they started, we're gonna raise, we're gonna hike. I said, I just don't see how that will be able to continue. It's a double-edged sword. One hand you screw people on this side, the other hand you screw people on that side. The savers and the pensioners get screwed this way. Low interest rates, higher interest rates, they do a little bit better, but then everyone else gets screwed. Housing prices go up, credit cards, debt, interest rates, all that goes up. Us paying the tax bill, that is the national debt. When I say tax bill, really. That goes up. Nothing changes. The same amount of borrowed money still sitting there, but the rates go up, so we have to pay back more. Again, I think the whole thing's a fraud, and I wish and hope, and I don't have much hope in this, but Donald Trump declares somehow one day it's null and void because it was fraudulent from day one, and there's a new system in place ready to go. Maybe it's cryptocurrency related. And imagine if he told everybody starts out with like $50,000 or just some number, 20,000, 10,000, something. That's how it should be in this country. Oh, you turn 18, you're an adult, here's some money to get you started. Yeah, you're going to need a job, but here's some money to get you started. It's like playing Monopoly without any money. When you play Monopoly, you at least get, was it $2,000? Right, a couple of the $500 bills and the rest, whatever. So you can play the game. Here we are playing a game, and you don't get any money to start with unless your parents give you something. Or you, again, you're 14, 15 years old. I'm going to go get a job immediately before I got to start paying bills. I'll raise my hand because that was me. McDonald's, riding my bike from school, leaving school early, you know, OJT, on the job training. I'm riding down the street. McDonald's, thank you. Minimum wage, of course. Thought I was the bomb. Got a 10-cent raise. Everybody else got a 5-cent raise. Snippy got a 10. Man, my boss recognized that's a good worker over there, man. 10 cents. Are you kidding me? But, you know, I'm a kid, whatever. And, yeah, but anyways, I'm looking at these rates. I said, you know, there's, I think more damage is done when the rates are higher than when they're not. So I feel like the Fed will have to backtrack at some point. Donald Trump's already barking at them now. Oh, they keep raising rates. I don't know what they're doing over there, you know. He's pretty much telling them, put the rates back down. And if the rates fall back down again, oh, housing, the recovery's come back again, you know. So anyways, take care.